Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day video. Today we are going to take a look at one out of the consumer staple sector, Colgate Palmolive. You are probably well aware of this company. It is January 10th, 2024. Let's jump right in. And if you are new to the channel, go ahead and hit that thumbs up button if you find any value in the content. Hit the subscribe button, help us out with the YouTube algorithm. Hitting that subscribe button and hitting that notification bell so you're notified whenever we put out any new content really helps out a small YouTube channel like me. So again, join us on this journey to financial freedom. Join the Vested Interest community. Hit that thumbs up, hit the subscribe button, and hit that notification bell down below. Help us grow this channel and get the word out. The only real way to financial freedom is to learn how to make money in your sleep, according to Warren Buffett, and dividend growth stocks are the way that I believe is the best way to do just that. Now, this is the Vested Interest Stock Screener. This is how I set up the videos. It's also how I look at companies on a high level to see if I want to invest in them. If they are companies in my portfolio already, it is a way for me to do a back check and see if they still meet the criteria I have laid out. You can pause this and read through it at your leisure. Now, don't just blindly copy my screener. Everyone is a different investor. Everyone has different timelines. Everyone has different investing goals. So make sure that you align your investing strategy, your stock screeners, the way you pick stocks for your investing strategy, for your age, for what you're trying to accomplish, how much money you want to retire in, and how long you have to do it. Now, if you want to know more about this company, check them out at www.colgatepalmolive.com. That's www.colgatepalmolive.com. That is their homepage where I pulled this information from. They had a very cool kind of timeline where you could click on the different years, so I pulled some high-level ones out. Our history: the small soap and candle business that William Colgate began in New York City early in the 19th century is now, more than 200 years later, a truly global company serving hundreds of millions of consumers worldwide. Throughout this history, Colgate people and Colgate values have been at the heart of our success. So 1806 is whenever they started. B.J. Johnson opens that's for the Colgate Company. William Colgate starts a starch and soap and candle business on Dutch Street in New York City. In 1864, B.J. Johnson opens a soap factory in Milwaukee, Wisconsin, which later becomes the Palmolive Company. So they started out as two separate companies, Colgate and Palmolive. 1908, Colgate is incorporated. So that was whenever they first incorporated. 1920, Colgate begins establishing operations in Europe, Asia, Latin America, and Africa. I think that's important too. Again, they are a global company, so they are selling their products worldwide, not just here in the United States. And 1953, Colgate Palmolive Company becomes the company's official name. That's whenever they really came together. The two separate companies become one, and the rest, as they say, is history. Again, if you want to know more about this company, check them out, www.colgatepalmolive.com. You can run through the rest of their history. It is pretty interesting, as well as look up what other products that they sell and where all they are located. Now, the reason we are taking a look at them, down 0.33% on the day. Not a huge drop, but a drop nonetheless. We are talking about Colgate Palmolive Company, ticker CL, out of the consumer staple sector. Closed out the day at $80.55. Excuse me. 52-week range as low as $67.62, as high as $82.09. Definitely closer to their 52-week high than their 52-week low. Average volume is 4.7 million. Today's with 3.8. You can see that sell-off. Looks like a bigger sell-off towards the end of the day. Tried to recover there after 2 p.m. and more of a sell-off throughout the latter part of the day. Market cap of $66.323 billion. Beta of 0.43, so less volatile than the overall market. Beta is the market volatility, 1 being the market. Anything less than 1, less volatile. Anything over 1 being more volatile. Price to earnings on this one, $42.17. That is very high. So this one needs to be growing very fast to justify that. We're going to see some numbers here that are pretty eye-popping whenever I looked at them. That may or may not justify that elevated PE ratio. This is much higher than the overall market. The overall market is only about 22 PE. So this is more in line with what a tech company would typically see. But if they are growing across the globe and justifying this, it might not be as bad as it looks. Earnings per share, EPS sitting at $1.91 per share. Next earnings date coming up January 26th. So be on the lookout for that if you are interested in earnings calls. I don't typically pay attention to a lot of earnings calls. Earnings calls are put on by the company. They are going to put out their best foot. They are not going to tell you, oh, we're having a terrible quarter or a terrible year. The sky is falling. They are going to be sunshines and roses. So I don't see what value you really get from earnings calls. Just look at the numbers, in my opinion, but some people like them. So January 26th, if you are interested in that. For dividend is $1.92. They are quarterly payers, so divide by 4 or just wait. We'll see that here in a minute. Nice starting dividend yield at 2.38. Obviously, if you got them closer to their 52-week low, that would be a higher dividend yield. Ex-dividend date was October 20th. Looks like they paid out November 15th. So they should have another dividend coming up here pretty soon. And a one-year target estimate of $76.30. So at least according to Yahoo Finance, they actually see more of a pullback over the next year on Colgate Palmolive. So it might be worth throwing on the watch list and watching it if you are interested in a company like this. Now, I like to look at statistics. You'd click on statistics here, and we're going to look at dividend yield theory. Go down to dividends and splits. We look at their 5-year dividend yield average at 2.37. We compare it to its current 2.38, or right here, current forward annual dividend yield 2.38, same number. And since it is slightly, ever so slightly higher, that speaks to some undervaluation, potential undervaluation, at least according to dividend yield theory. I would really just call this one fair valued. You get over, 2.3, 2.3, 2.38 versus 2.37. That's really fair value. Now, this is where you do see some negative here, right? Payout ratio, 99.48%, extremely elevated. I like 75% or less. So this does not meet the criteria that I'm looking for. I want more room in case this company was to have trouble, reinvest back into it, have the ability to reinvest back into itself, buy back shares, pay down debt, make acquisitions is all what free cash flow is used for. And whenever you get such a high payout ratio of your free cash flow just associated to the dividend, that does not give them much room for error. Now, went back to 2022. We're going to go by quarters here. 2022 in 6/30/2022, $2.3 billion. We're looking at free cash flow here. We want to see if it's growing over time, because typically if a company has free cash flow growing, they have growing dividends as well. September 2022 at $1.8 billion, so a bit of a drop there. Jump back up in December 2022 to $2.1 billion. March of 2023 up to $2.3 billion. June of 2023 up to $2.5 billion. And then September of 2023, $2.5 billion. Overall, I would say at least from 2022 to September of 2023, they are growing over time, and they are consistently, if you see this, 1.2, 1.3, 1 million, 1 million, 1.2, 1.296, growing their repurchase of capital shares as well, or at least repurchasing their own shares pretty consistently, right around the 1 million shares per year range. So that is nice to see as well. They are utilizing their free cash flow pretty well, at least as far as repurchasing shares. I don't like the payout ratio here for their dividend, but we'll talk about that a little more. Now, I always recommend more than one source, so another one that I like is stockanalysis.com. You pick any sources that you like. Just make sure you're picking more than one so you can back check the information you're getting is accurate. And they've had 14 stock analysts take a look at this. They call it a strong buy. Even though they have an elevated price-to-earnings ratio, even though they have a low estimate of $73, which would be a 9.37% decrease from where it currently sits, and that would be in line with what we saw with Yahoo Finance for a low of $76 over the next year, they still call it a strong buy. They have an average estimate of $85.57, which would be a 6.23% increase from where it currently sits. And if it happened to hit their high of $96, that would be a 19.18% increase. All the while, you could collect that 2.3+% dividend yield. I like to get into statistics here and see how financially efficient the company is. To do that, we're going to look at return on equity and return on invested capital. Now, these are the highest numbers I think I've ever seen for return on equity. Return on equity, ROE, 1,971.4%. That is smoking high. So this may be part of the reason that they have such high PE, price to earnings ratio. If you are really getting a return on your equity at 1,000+%, they are really efficient at utilizing the dollars they are reinvesting back into themselves, and that means that they should, over time, continue to grow and do well as a company. They also have a very nice return on invested capital of 23.78%, which beats the 10% I'm looking for both of those metrics. Now, I also like 5% or better for earnings per share growth. They're sitting at 14.77%, so more than 3 times what I look for there. So overall, the revenue growth as well forecasted to grow at 5%, 5.1%. So overall, the numbers are very good on this one. Other than the valuation, I would really like more of a pullback down into the, let's call it mid to high 70s would be where I'd look at this one. Not that it's very far off of that at $80.55, but it would be nice to get a little bit more of a pullback and a higher starting dividend yield. Now we're going to look at the dividends again. Some of the things I don't like: payout ratio. They're saying 100%. Yahoo Finance said 99%. Either way, over the 75% I look for. And the dividend growth is not very high, 2.69%. And there's a reason it's not very high. If you're already maxed out on how much you're paying, you would have to be going into debt to pay out a dividend if you're over 100%. They are a quarterly payer. We're going to go back to October 2022. They were paying 44 cents. April 2021, they raised it up to 45 cents. April 2022 up to 47 cents, April 23 up to 48 cents, and I would expect if they're going to continue this dividend growth, it'll be another penny, maybe 2 in April of 2024. So not a fast-growing dividend, decent starting dividend yield, kind of high on the price to earnings, but man, that return on equity and return on invested capital does look nice. Earnings per share growth forecasted looks nice. Overall, again, I would look for a little bit more of a pullback on this one so you could get a better entry price, but not a bad company, and probably a company you have something, whether it's their toothpaste or their soaps, Palmolive. Maybe you wash your dishes with Palmolive soap. You may have one of their products in your cupboards and not even know it. Well, that is it for this one. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Help us grow this channel. Join the vested interest community. Join our growing community of dividend growth investors. I do stock pick of the day videos like this Monday through Thursday. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company like Colegate Palmolive you'd like me to do a video on in the stock pick of the day series, drop it down below and I'll work it into the rotation. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Let me know if you've got Colegate Palmolive in your portfolio, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investor journey for educational and entertainment purposes. Investing involves risk. You can't win. You should never invest any amount of comfortable. Always do your own research. Investments to your situation, circumstances, and intellectual criteria, or seek the advice counsel of a financial advisor.